Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a subdued start to the June series. The Nifty is trading around the 10,700 mark. All sectoral indices barring auto trade with cuts. ICICI Bank is off the day's high but is among the top gainers on Nifty after it refuted rumors of asking MD and CEO Chanda Kochhar to go on an extended leave. Bajaj Auto sees the biggest gain in 2018 after reporting robust sales figure for the month of May. Other automakers also fare well. And India's manufacturing activity shows signs of moderation but remains in expansion mode for the 10th straight month.
Of course, and there is some news bits on the screen on the power producers as well. Allahabad High Court has given decisions saying that there will be no coercive action against power producers. That's the key thing. So do watch out for some of those stocks as well. They could be active. No action against power producers on the basis of the Feb 12th circular of the Reserve Bank of India. We'll talk about this in a moment from now. Also get in Arpan as well as some lawyers to really talk about the impact of such a thing. However, the markets as they stand right now should come up on your screen. It's been a flat trading, mildly choppy but a flat trading day. The Nifty lying absolutely flat. Similarly for the Sensex as well. The Nifty Bank has corrected a bit. The losses in the Nifty Bank are being absorbed by the kind of gains that have come into the auto companies. Frankly, if you just look at the Nifty 50 heat map, it's all about what autos are doing. iShares may be on the losing end, but almost everything else is on the gaining end. So iShares is down about 3.5 or 4%. But look at the top row otherwise. Tata Motors, Hero, Maruti, Bajaj Auto. It's all about autos in the session today. Also, because of the expected change not happening as smoothly because the trading window is not open as yet, HDFC Bank and HDFC Bank in particular has not really been able to gain too much. Therefore, it's lying somewhere on the losers list right here, 1.24%. No big moves for HDFC Bank as well. So that's the sum and substance. It's a flattish day, lackluster. Volumes obviously will be a bit low. Just before I hand it over to Navneet, I just want to bring up the volume picture out here if we can, and maybe the market breadth, to just give you a sense and a glimpse of what's really happening at the broader end of the spectrum. Firstly, the market breadth in favor of the declines, substantially higher number of declines. And two, the volume picture will come up on your screen. In today's session, the volume should be a bit thin after the record turnover. I tell you what though, at about 4 lakh crores at this time around, it's probably not as bad, slightly higher, I presume, than what you usually see on the first day of the new series. Navneet, what about the more liquid universe?
Well, Neeraj, we are off the day's opening levels at least, and the broader markets are the one which have seen a sharper correction coming about. In fact, before we start off with Nifty and Bank Nifty futures, I just want to pull up the India Volatility Index. At one point of time, that had surged nearly 10% on day one of the new series, but now that seems to be off the high levels. Currently at 13.3, it's up only 1%. Remember, at one point of time, that was up nearly 10% in trade. We started the June series with discount coming in for both Nifty futures as well as the Bank Nifty futures. I believe that a discount has now narrowed. Let's just pull up the futures plate. The discount on Nifty futures is currently 14 points vis-a-vis 33 points which we saw yesterday. 5% higher in terms of open interest, still indicating because the index is down, probably there are some fresh short positions that are being built up in today's session. And the rollovers, remember, picked up quite sharply for Bank Nifty in the last two trading sessions. Bank Nifty has started the series with a discount of about 200 points, and look at that, that's narrowed to almost 33 points, 7% higher when it comes to the open interest build up so far for the June series. But right now it is indicating that there are fresh shorts being built up on both these futures. In terms of options data, maximum open interest concentration is at the 11,000 call as well as the 10,600 put. So probably for the near term, watch out for that range in trade. And the strikes which are active in today's trading session on the call side is we've seen open interest addition coming in from strikes like 10,700, 800, 900. All these three strikes have seen good amount of OI build up. For 700, as of now, 2 lakh shares being added, almost 6 lakh shares being added for the 10,800 strike, whereas put writing has been witnessed for the 600 and the 500 strikes. Even the 10,700 put has seen 8.7 lakh shares being added as of now. So let's see, 10,700 will be a big test for this market because we started the series above that mark. If we breach that level. Let's see if there is more selling pressure which comes about or not. In terms of stock futures, two stocks I want to highlight. One of them is Bajaj Auto. We'll talk about this in more details during the show. The stock's obviously up on higher monthly sales number. It's also gone up on high volumes, and the futures of this one has seen significant amount of long position, though the markets may have come off the day's high, but Bajaj Auto has been sustaining its gain. So 18% higher when it comes to the futures open interest. The other one is CG Power. Remember, this counter is down for the fourth straight trading day. Yesterday it was down 21%. Today it's down another 10% in trade, and we've seen significant amount of OI build-up for both futures as well as couple of option strike, telling you there is heavy amount of shorting seen even at lower levels as it touches fresh 52-week low in today's trade, Neeraj.
Okay. Just before we get to our researchers, keep in mind this story, and we'll be getting you some phoners on this very, very shortly, but no action against power producers on the basis of the Feb 12 circular of the Reserve Bank of India. The High Court has directed a meeting of the power producers with the Reserve Bank of India as well. There's also news about how the court has directed the Ministry of Finance to hold meeting in June with the power producers. So do watch out for that. In fact, I'm told we do have a guest. Okay, I think we have Mr. Sajjan Puvaya. He's the IPPS counsel. He joins us right now on the show. Paswini should be joining us any moment. But Mr. Puvaya, thank you so much for joining in. Your initial thoughts on this seems like a bit of a relief for the power producers from the initial flashes that are hitting the screen right now.
Yeah, I think so. It's of course some immediate relief given the heat of the situation, both in terms of weather and the regulatory regime. But I think the Honorable High Court has really considered all matters in its holistic perspective and said that you really don't disconnect oxygen to somebody who's on a ventilator. What you need to do is to look at a holistic perspective of trying to see that these assets continue to produce and remain national assets rather than they being squandered away in terms of a liquidation process. So I think it's a step in the right direction. We really hope that the government and the regulators will look at it from that perspective and try and arrive at a situation that's win-win both for the industry and for the country.
What, sir? Just wondering what would change in a month. I presume it's the MOF has been directed to hold meetings with the power producers. I believe the situation would have reached this level only when the powers to be are believing that there is nothing more that can be done, and therefore, in your words, the oxygen needs to be cut. Now, what is the expectation when the meeting happens in June? Would there be a further round of consultation about what is it that can be done in terms of measures so as to enable these power producers to continue producing the business?
Obviously, yes. I would really wish what you said was true. I really wish that the powers that we had applied their mind and arrived at a considered decision on what ought to be done, whether to kill or to revive. But that's not really what's happened. We've had a parliamentary committee of 26 members of parliament cutting across party lines who examined the matter over a period of 6.5 months, and so
Okay, so any dates? I mean, what we have is that the meeting that is to be direct. I mean, from whatever little we are gathering, they have directed that the meeting should happen in the month of June. I'm guessing that's the timeline. Okay, I think we've lost Mr. Sajjan Puvaya, but okay, this is the news that is coming in. Before we get to any other pieces of news, Paswini Upadhyay is also with us. Paswini, what do you make of this? I mean, the council is saying that the much needed supply of oxygen is not cut, which is a relief, but your thoughts?
Neeraj, essentially what the RBI February 12th circular had said that banks should start with the resolution process and come up with a resolution plan for companies, and the cutoff date for this was August, and after August, if lenders can't come up with a resolution plan, all these companies will then enter the insolvency and bankruptcy code pipeline, so which is why these power companies must have gone to the Allahabad High Court for immediate relief. Now what is curious is that the order itself just points out to the parliamentary committee report to point out that there is distress in the sector, which is why this sector needs attention, and has then requested the finance ministry to meet the power producers and come up with a resolution. But the question can come up with in the context of any other sector who may now want to approach the High Court for similar relief. Immediately, any resolution that the lenders or any conversations that the lenders were having with these companies to come up with the resolution plans will now need to be stayed until this meeting sort of resumes, and we'll know from that decision that this meeting sort of concludes with that what's next at the Allahabad High Court.
Are you saying that this could serve as the base case for a bunch of other stress sectors?
Who knows? Because look, the High Court order doesn't say that specifically on what grounds has the court given this relief to power producers. Any other sector that is in distress can make out a similar case and ask for a similar relief. But this is a very preliminary sort of thought from the 3-page order that we have. And if we had Mr. Puvaya back on the line, he would tell us specifically on what grounds these power producers were able to get this kind of relief from the High Court.
Unfortunately, we're not able to get him back on air. Maybe if we do, then we'll try and ask him the grounds on which this decision has been given as well.
That will be important, because those are the similar grounds that other sectors will be looking at to probably get similar relief from high courts.
Okay, Paraswini, so we might actually get him in moments from now. Anything else that is of substance? I know it's just too immediate. You probably wouldn't have gone through the entire order as well.
No, it's just 3 pages, not very long.
So anything else that's stood out?
Not really. I mean, they have just referred to the NPA and the kind of troubles that the power producers were facing. A very generic kind of, and it's not even an absolute stay of sorts. The High Court has used a very mild language to suggest that we request the Finance Ministry to meet these power producers and come up with some sort of a solution. So it's not like an absolute stay to, not a very strongly worded order for you to conclude anything further.
Maybe kicking the can down the road, so to say. I think in the initial thought that Mr. Puvaya expressed, he was saying that, for now the oxygen will not be cut. My question would be that some point of time.
For how long? For how long? Eventually, you will have to take some sort of a decision.
We have him, Paraswini, in case you want to ask him questions. Okay,
Mr. Puvaya, thank you for joining us back here on Bloomberg Quint. Sir, could you highlight for us the specific grounds on which the power producers went to the Allahabad High Court, and probably the grounds that prevailed at the High Court for the court to have given this decision?
See, the matter, I have appeared for them as a senior advocate. The matter is sub judice. I don't want to comment or quote on what happened in court, but I can tell you, all that I can tell you is this. The petitioners have approached court because there is a parliamentary committee which thinks that these assets must be revived, and mechanical application of RBI norms is not the remedy. Despite that recommendation, we have found that the RBI has proceeded to mechanically apply its norms or thresholds. And therefore, when you have a scenario where executive overreach occurs without application of mind and without consideration of relevant material, I think the only method available is to go to courts and receive some succor, which we have. We really hope that the executive will look at it in the right perspective, consult with everybody, and arrive at a decision which is both good for the nation and the industry. I don't think in our experience anyone gains by liquidating a national asset which otherwise can contribute to wealth creation in the country.
Mr. Puvaya, but the problem here is, can the same argument not be made for other sectors where a question of national asset comes into play? There are sectors which are equally in distress. Would you believe that this sort of relief then can be extended at all if these guys go to the High Court? Can we extend it to those sectors as well?
I don't think that's the question, whether this relief can be extended, but I think the larger question is, any similarly situated national asset which is going through stressed times because of extraneous circumstances certainly can approach the courts to arrive at a remedy which will ensure that these assets thrive, these assets prevail rather than being liquidated. Now, will the same sauce apply to the goose and the gander? That's a question which I think courts will decide depending upon the merits of each matter. But from a broader perspective and from an industry perspective, I think it would be imprudent to kill assets because extraneous considerations or extraneous forces have prevented them from generating or thriving as much as they should.
Okay. Can you also weigh in on how will this impact the lenders who were probably, hoping to come up with a resolution plan for some of these companies? A quick word on, because that side also some of your public sector banks are there. So I'm saying that to address the issues of one national asset, the other sort of arm of the government is also suffering, sir.
I agree, but I think it is an imprudent argument to say that I will kill one sector to address the inefficiency of another sector, number one. Number two, This is not a case where the banks have been gunning at the sector to say that we will necessarily liquidate you. There have been processes of corporate debt restructuring, stress asset revival, etc. going on. When these aspects of revival were being considered and implemented, Reserve Bank comes from above with a swell swoop of the sword to say that you will now not do anything other than liquidate this process by insolvency proceedings. I think that's the issue. I don't think banks are really worried to say that there will be no application of mine. Certainly the banks are entitled to look at each case and apply their consideration to each case and then take a decision which is most prudent for each case. You can't have a straitjacket formula of saying 180 days suits everyone and therefore everyone will now fall in line to get liquidated. That I think is really, really imprudent from a scenario where India wants to become a power surplus country rather than being a power deficient country.
All right, Mr. Puvaya, thank you for joining us with your thoughts on the order. Neeraj?
Well, thanks for taking us through that, Paswini, as well. Let's wait and watch whether this gets applicable, if you will, to some of the pockets as well. In June is when we get to know what happens in the meeting between the Ministry of Finance and the Power Producers Association as well. Okay, just before we get in, the management is our research team with us. Then we should just talk about the top stories of the day as well. Remember, it's Friday, so that time of the day wherein we try and do that. And I'm told Somit Sarkar is with us. Jayesh Kilani is also with us for the chart of the day. Let's start off with Somit first. Somit.
So if you see the aviation turbine fuel prices now, that have been hiked for the 11th straight month, and it has been hiked by around 7.1%, which is the highest month-on-month hike that we have seen in the last 17 months. Now jet fuel will now be costing around 71,245 rupees per kiloliter on an average across India. Now these are the prices on an average across 4 cities, that is Delhi, Kolkata, Mumbai and Chennai. Now with June prices coming in, if you see on an average for the first quarter of financial year 2019, the prices have been around 67,000 rupees per kiloliter, which is higher by around 27% compared to the last year. More importantly, these prices are also at a 3-year high. Now these higher fuel prices will definitely have some impact on the financials of the airline companies in the first quarter of financial year 2019. Now it is difficult to predict the exact impact because there are various factors, multiple factors related to that. But if you see the fourth quarter results of the airline companies, you can have some idea of how big this can be of an impact for an airline company. So if you see in the March ended quarter, the fuel prices were at an elevated level, which resulted into a weak set of numbers for Indigo and Jet Group. Indigo's EBITDA, that is the earnings before interest, tax, depreciation and amortization and rental cost, had declined by around 16% because of higher fuel prices, while Jet Group on the other hand reported a negative EBITDA as against a positive EBITDA in the last year. However, SpiceJet had a limited impact because of higher fares and because of higher treasury income, but the numbers reported by SpiceJet were way below the analyst estimates because of higher fuel cost. Now fuel cost on an average had increased 30% for all the airline companies in the fourth quarter of financial year 2018 compared to the last year, and Jet Airways, which is the second largest domestic and international airline company in India, had clearly mentioned that it had an adverse impact of close to 366 crore rupees in just one quarter because of higher fuel prices. Lastly, if you see the fuel cost per available seat kilometer, that was also at a 3-year high for all the 3 airline companies in the fourth quarter. Now recently, to counter this, Indigo had come up with had surged its prices for ticket rates. It had put up fuel surcharge of close to 200 rupees for distance travel if the travel distance is less than 1,000 kilometers, and it had put a surcharge of around 400 rupees if the distance travel is more than 1,000 kilometers. Now other companies have not come out with such surcharge, but if the top player, that is Indigo, if Indigo is surging is putting a hike on the ticket prices, it gives them the leeway to increase their ticket prices and thus thereby offset the impact of higher fuel cost.
Thanks a lot, Somit, for bringing in all those details. Well, as he also highlighted, recently only Indigo increased fuel surcharge to combat the rising fuel prices. But moving on from that story on to the chart of the day, Jayesh Kilani is here with us with some seasonality trends which he is witnessing in the Nifty Pharma Index. Jayesh, over to you.
So Navneet, the Nifty Pharma Index has indeed been one of the worst performers this year so far. It has lost about 15% on a calendar year basis, and in fact last month itself it was the top sector loser by losing more than 9% for the month itself. But there could be some respite going forward, as you can see the seasonality chart on the screen for the month of June. So what has happened in previous instances for the month of June is that last 5 years, 4 out of those have been positive, with the exception of 2015, where the index actually returned negative 2.5%. Otherwise, if you've seen, there have been healthy gains of about 10 to 11%, and last year also we saw about 6.5% return for the index itself. So not only June, but if you have a look at the July series as well, there's been only one instance in the last 5 years. In fact, that was last June, where you've got negative returns for the pharma index. And if you see the trend, how the June, how this month has been, look at what the calendar year has done so far. 4 months out of the 5 have been negative, with April returning positive 8.4%. So with that, what you can look forward to is, for that I spoke with Mahesh Patil, co-CIO of Aditya Birla Sun Life Mutual Fund, and he said that their take on the pharma industry is that it's going to be a stock-specific rally that they are expecting, based on the ability of the companies to get individual approvals. In case those happen in time, then they could see some rally, but again, it will be only for the companies that actually get the approvals.
Okay, Jayesh, thanks a lot for bringing all those details with regard to the Nifty Pharma Index. But moving on, let's also address some earnings. We've got a management lined up. S. Chan came out with its numbers where revenues were up almost 26%. The profits too went up for the quarter by almost 29%. However, there was some dip that was seen in the gross margins, which were down 170 bips. That was on account of higher paper prices and also GST. Let's get some more details with regard to their Q4 earnings. We've got Samir Khurana, the head of corporate strategy at the company. Hi, Samir, good afternoon, and thanks a lot for joining us. I think it's also just a year for you guys for listing as well, and Q4 is usually seasonally a very strong quarter for a company like yours. Are you happy with the performance that the company's posted?
Yeah, hi, good afternoon. So yes, Q4 is the most important business quarter for us. It's a seasonal business, and Q4 is approximately 80% revenues. This year has been very good for us. It's been a very important year. We have managed to grow the business at 18%, and all of this is organic growth. And at the PAT level, the growth is at 73% year on year.
Okay, Samir, you guys had raised over 700 crores last year from the primary market, and I guess your finance cost as a result of which, because you were looking to repay the debt with that money. If you could just give us a sense as to what's the current debt, what's been the repayment till now, and how much of the fund which was raised from the primary market has been deployed so far?
So we raised 325 crores from the primary market. The rest was an offer for sale by the existing shareholders. Of the 325, we used 255 crores to repay debt. And as on date, the net debt is around 70 crores as on 31st March. And this is the peak working capital cycle for us, which is why we have a debt. So most likely by September, we would be positive cash and zero debt. Of the IPO proceeds, we have approximately 12 crores, which is still to be utilized, lying in bank deposits. Apart from that, most of the money was used either for IPO expenses, 255 crores to deleverage, and the balance for various working capital and corporate purposes.
You were also looking at some opportunities in the unorganized market with regard to some acquisition, and you all rightly highlighted it's all organic growth that one has seen with regard to the numbers. Anything, are you in talks with anyone with regard to acquisition for FY19?
So we are looking at not the unorganized market, but the regional markets. We are a CBSE ICC player. We recently ventured into the regional markets by acquiring Chaya Prakashani in 2016 December. And currently we're looking at a few opportunities in South and West. Some of these are at an advanced stage, and we're hopeful that something will fructify over the next 3 to 6 months.
A couple of questions. Did I hear you say that you believe that outlook for FY19 is about, or rather FY18 you grew at about 17 or 18%. I presume in the release you've given that the outlook for FY19 you expect organic growth of 13 to 14%. That's a bit lower than what you've clocked in. What could be the reasons thereof?
So last year we gave an outlook of 14 to 15%. We actually managed 18%. The objective is to overachieve. We are looking internally. The targets are to do a 16, 17 similar growth. But when it comes to giving a guidance, we have chosen to be conservative.
Okay.
We have had the best volume growth this year in the last 5 years. We have over 10% volume growth in both higher education and K-12. And we believe that going forward, the whole the impact that we have created by giving value-added products is only going to further help consolidate our leadership position.
So, okay, couple of questions really. One, I think you've invested or have looked to invest heavily in the digital capabilities. How does that augment the growth that you would have? And at a higher base, are the business metrics in place for you to be able to grow the K-12 business at the CAGR rate that you have in the previous five? Unless I'm very wrong, the last 5 years you've probably done northwards of 40% CAGR in K-12. Are the building blocks in place for a rate of growth of this magnitude to continue in the K-12 business?
So the first question, digital, we have spent close to 128 crores. That's a combination of minority stakes in edtech companies and in-house businesses. Digital businesses for us are growing at 35-40%. It helps us sell our core physical product, which are books, because one, today most of our books actually have some digital enablement. So when you buy a book, you can actually, through scanning a QR code, have access to videos and animations. Plus, we also combine books with various digital content. Coming to the second question, the K-12 business has grown at 40% CAGR for the last 5 to 6 years. Half of that growth was on account of acquisitions. The balance half was organic. So organically, yes, the target is to continue growing somewhere between 17 to 18% on the K-12 side. Anything above that will be a function of acquisitions or strategic alliances.
Sameer, do you have the bandwidth to pass on the cost pressures that you've highlighted in the investor presentation, where the gross margins have dipped by 170 bips, and that was on account of higher paper prices and also some GST adjustments?
This year was exceptional. This year means financial year 17-18, because paper prices actually went up by about 15%, which was both on account of raw material or paper actually rising and some impact of GST. We have the ability to pass 7 to 8% of the increase buying a price rise in our end products. This year, we chose not to increase the price of our higher education books because we were realigning the portfolio. In the current year, which is 18-19, we have already contracting for paper rates, which will at best increase by around 4%. So we do expect the margins to come back and improve by another at least 100 points, 100 to 150 basis points this year.
Sameer, just a last question. Any message for your shareholders who applied for your IPO last year? I think the issue price was somewhere about 670, and we've seen a sharp correction in the stock price.
See, as a management, when we went into the roadshows, we had given a certain guidance. We had mentioned about the whole thesis of looking at our company as an investment opportunity, and that thesis continues to be as it is. So we have grown the school business at 18%. The overall business has grown at a similar rate of 18%. We had raised money to deleverage. The savings in profits is very visible. So nothing has changed from what we said at the time of marketing and at the time of the roadshows and now. And I think as a management, we'll continue to focus on delivering both to our customers and ensuring that the business increases its profitability. It's more cost efficient. It's more the return ratios are better.
Okay, Sameer, we'll leave it at that note. All the best to you for FY19, though. That's the management of S-Chand reporting their numbers, where some bit of pressure was seen when it came to the gross margins. And look at the stock. I think there are some liquidity concerns as well, because I don't know what are the volumes. As you can see, the chart indicates it's trading with cuts of nearly 3%. And year of listing for S-Chand, sorry? 12,000 shares. Thanks for that, Neeraj. So yes, I think the volume is a little bit on the lower side. But let's move on and talk about some stocks which are in focus. And we're going to put focus on Tata Motors in today's trading session, where the stock has snapped a 3-day losing streak and also made a 52-week low. It made a 52-week low, pardon me, in yesterday's trading session. Neeraj, tell us, what are you tracking with regard to Tata Motors?
So, I know we spoke about this in the morning, that perennially people talk about, at least the last 1 year, people have been talking about how the stock is arguably one of the cheapest auto names, but it continues to become even cheaper. Just thought to put these numbers into context of what it has done in the past. Now, It's currently valued at about 0.9 times FY18 price to book, roughly around these valuations. This valuation of 0.9 times was last seen in Q3 FY09. So over the last decade, this has been the base valuation for Tata Motors. Now, why is this important, this date, Q3 FY09? Look at what had happened back then in FY09. We were amidst the global financial crisis. The JLR EBIT margins were negative 6.5% then. And the domestic India margins were about 6.7%. Again, nothing to write home about. There were negative cash flow from operations coming in for Tata Motors then. So all of these factors held true in FY09, and at that point of time, Tata Motors was trading at 0.9 times 0.9 times price to book valuation. So the question then therefore that comes to mind is, are the current times that bad that the stock should trade at that level and that valuation? That's the the question that people would probably want to answer. Bring up the ANR if we can. I'll just give you a sense of what the sell side seems to be factoring in. Again, I know there aren't too many buyers, but by and large, but look at the return potential for Tata Motors, 45%. I really doubt that there are too many auto companies, large cap auto companies, wherein the return potential is so high. And this is primarily because Tata Motors is trading at the levels that it is trading at. So whether it will bounce back remains to be seen. At some point of time, people will believe that the worst is over, and they will not buy growth necessarily in the company because the growth is anemic and you don't know when it will come in, but they will buy the valuations. There are a bunch of people who buy not necessarily the business growth, but buy the valuations. Maybe that could be the case in Tata Motors, though. I would quote myself, but as T.S. Harrier was saying this morning, that after you buy it, it may well correct another 10, 20 rupees, etc., so on and so forth. But who is to say that it will stay that way, or whether it will bounce back as well? Yatin is a better bet on this, to be honest. But I just thought I'll try my hand at just giving a historical perspective of what the valuations currently are versus what they have been in the past. Navneet.
Well, Neeraj, definitely. I guess Mr. Harrier in the morning stated that it can be a long-term buy for 2 to 3 years, because every time, a lot of the analysts we speak to, and as we can see for the ANR, almost 73% analysts have a buy rating on this one, but we're just waiting for the recovery to come by in Tata Motors. So remember, if you're buying the stock, it's a long-term call which is being given by a lot of the market analysts. In the last 12 months, however, it has underperformed, down 40%. If you look at the PE for FY19, it's trading in single digits of almost 8 to 9 times. That's about Tata Motors. We'll keep tracking that. Bank Nifty is off the day's low, 26,790. It was down over 1% at one point of time, but now we're seeing cuts of almost 163 points. Good time to bring in Manav Chopra of Indiabulls Ventures, who joins us on the show now. Hi Manav, good afternoon to you. Thanks a lot for joining us, and also congratulations on your call on Nifty Auto.
Yes, thank you so much. I think we did have this interview last time, and where we were discussing in detail about how some select stocks from the auto packs would do well, and at that time I think M&M was one of the stocks which we had clearly highlighted as to be one of the leaders going forward, and that has been the case so far. And even at the current levels, the stocks that we had recommended earlier were Eicher Motors and Tata Motors also. I think eventually sooner or later you will see these stocks to also see some sort of a good outperformance going forward.
Manav, that's the M&M call that you had given in the past, but let's talk about the index call today, Nifty and Bank Nifty. What are you doing with both these indices? They've recovered from the day's low.
At the current levels, definitely, the kind of a move that we've seen in the markets in the last couple of trading sessions, and especially yesterday, I think markets could see some sort of a consolidation in the near term. The support of 10,600 would hold, and going forward, we could see higher levels. So I sense that since the oscillators have entered into a bullish territory, one should definitely look to maintain a buy on dips. For the Nifty, we expect an upside target of close to 10,800 to 900. Bank Nifty specifically, has formed a new high and has confirmed a series of higher tops and bottoms. And on the immediate basis, the positional support for Bank Nifty would be at 26,600 to 26,650. And as long as these levels are held, I think we would be inching higher, and on the immediate basis, the targets would be close to the levels of 27,200 on probably next couple of weeks.
What about individual stock recommendations for the day, Manav?
Yes, my first buy call is on Hero MotoCorp. The stock actually has formed a good series of bottom near its important weekly support levels, and we have also seen a breakout after a good few weeks of decline. So at the current levels, it provides a very good risk-reward ratio, as the prices have also tested its long-term averages. I sense for the near-term perspective, Hero Moto has bottomed out, and for an immediate basis, we could see targets of close to 3750. But for on the long-term perspective, we hold a positive view on Hero Moto and expect levels of even close to 4200. It has an important support on the positional basis close to 3600, which is on a very short-term perspective. One can maintain a stop of 3560. My next pick would be a buy on Godrej Consumer Products. The stock has been on a very good uptrend and has been continuously forming a series of high tops and bottoms. And in such markets, a low beta stock which is seeing a breakout on the weekly chart perspective, confirmation with volume, I think this is the stock would provide some sort of a safe bet in the markets going forward at such levels. We recommend a buy into this with a stop of 1140 for an upside target of 1225.
No autos. Okay, Manav, so those are some ideas. By the way, somebody just gave an update as well. Nestle, with this rise that we've seen today, let's just bring up the stock price of Nestle, 2.5%. But in the intermediate term, intraday, with the 3% uptick, Nestle hit that 10,000 mark as well. So good going for the Maggie maker. I remember about a couple of years ago, there was a moment wherein all TV screens, be it general news channels or business news channels, were logged on to that case of Maggie, and the stock was at 5,500 or thereabouts, back to 10,000, or rather at 10,000. It's an amazing achievement. Okay, before we move any further, let's head across to the Equirus Healthcare and Chemical Day Conference, wherein Darshan is in conversation with the Chairman and Managing Director of Aster DM, Mr. Azad Mupen. Darshan, over to you.
Well, okay, I have Dr. Azad with me. Dr. Azad, thanks so much for speaking to Bloomberg Quint. We spoke on the results, but let's talk about the outlook going ahead. What can we expect in FY19? Tell us about your expansion plans in terms of, hospitals, clinics, or pharmacies, whatever you're planning to set up in FY19.
Sure. So we have expansion plans both in India as well as in GCC.
Okay.
Because as you know, we have 83% of our revenues and incomes coming from GCC, and only 17% from India.
Okay.
So in India, we have a hospital coming up in Kerala, in Kannur.
Okay.
And another hospital coming up in Bangalore, the second hospital in Bangalore. So these should be online ready this year. And in GCC, we have in Dubai, Aster Hospital coming up, in Sharjah another Aster Hospital coming up this year.
Okay. What about margins? Because if you go through the historic trend records, margins have come off from the high double digits to probably, the low single digits, to the single digit levels. How do we see margin trajectory going ahead?
Yeah, margin, if you look at from last year to this year, what we already declared, you will find that there is a margin increase, and the efficiencies are kicking in. And now, because we started large number of facilities in Dubai and other GCC countries, expecting the rollout of mandatory insurance. So that had pulled down the margins because of the expansion.
Yes.
But now it is catching up, and we are this year we have done much better than last year, and we hope that it will go forward.
Okay. You had certain amount of write-offs in Saudi Arabia.
Yeah.
What's the update on that? What's the level of recovery?
Sure.
What is expected to come back to the company?
So the Saudi write-off is done and dusted last financial year. So we don't have anything being carried forward.
Okay.
So everything has been done, and we got whatever money was due to us after a haircut which we took. So that whole thing has come now.
Okay.
We got, in fact, we got some extra payment.
Okay.
More than what we had actually provisioned. So that issue is over, and Saudi is now only 5% of our GCC business.
Okay.
So unlike earlier times, it was having a significant portion. Now it is not a major issue at all.
Okay. What's the, on a consolidated blended basis across your hospital, what's the occupancy level currently? And once this expansion kicks in, what's the target occupancy levels that you're looking at?
Yeah. So expansion is around between 60 and 65 in India and GCC. The issue is that the expansion, when we are adding more beds, there will be a reduction in the occupancy levels.
Yes.
So it can't be actually taken into consideration. But when you look at the revenues, the growth at the top line and bottom line, if you look at our graph, it has been on the upward trend and around 25% CAGR in EBITDA as well as in revenues.
Okay.
But the occupancy levels also are picking up, and with more capacity added, the occupancy has got a tendency sometimes to go down little because you are adding a 300-bed hospital, which may be occupied little in the earlier years.
Okay. You did manage to hire some consultants because you're looking at cost cutting, you're looking at optimizing certain matrix. What's the update there? Is that fully done and dusted, or is this a continuous process? What exactly are you doing on that front?
Yeah, that process is going on. We think that the most important thing which can improve our profits is by reducing cost, both in India and GCC. So we have taken McKinsey in GCC, and in India we have taken EY. So they are on that process for control of both HR cost as well as the material cost.
Okay.
Okay, that's of course on the sidelines of the Equirus Conference. Bloomberg media partners for that conference, as also the Axis Conference, which is underway for the last couple of days. Okay, before we get in our fundamental guest and some thoughts on cement, construction, home improvement, since we have Sarvendra Srivastava also with us, let's just get his chart checks as well. We already spoken to Manav about them. Sarvendra, good afternoon. Many thanks for joining in today.
Yeah, good afternoon.
What's your outlook, Sarvendra, on the indices this series? What is the trade that you're punching in today, or you punched in yesterday for the new series? And both on the Nifty and the Nifty Bank?
I think it's a mixed bag right now. So not, as I said, for the whole series, you'll have to wait out for a session or so and see as to what, because yesterday the volatility was like humongous, and the kind of volumes that we have traded, you need everything to settle down, and those 200, 300 points of discount on the Bank Nifty, I think rarely seen. Is that kind of discount I think I have not seen in many years in the past. So I think I let it settle down a couple of days, because Bank Nifty has got a positive monthly close. Nifty on the contrary has got a monthly negative close. So let's see which, either the Bank Nifty pulls up the Nifty or the Nifty drags down the Bank Nifty. My sense is that when you get extreme sentiments like these, once they cool off, you'll get a clear picture. So my sense would still remain, since now it has started to trade below 10,750, 10,700. We've signed that level. I would say that for the Nifty itself, I would say that I would still maintain that one retest, just like the last time we had said 10,400. Last time when we went there, one more retest of 10,400 is pending for strength. So now that retest will tell us that are we going to break lower or not. So if we go to 10,400, which I feel we will, and hold, then you have that construct of a uptrend. If not, and if you go there and then break it, then there's problem.
Okay.
Then there's one scenario that we don't go there and actually we break out from here. That will be very risky. If we break out from here and it becomes a quasi kind of a bull trap, then when it unwinds, it can be a little serious. So I think still in the process of figuring out these three scenarios, but my sense is that I'll still stick to one more retest of 10,400.
Okay, but for now, maybe staying on the sidelines and observing it. If that is indeed the case, what is it that you are doing in terms of trades? If not the index, are you trading specific stocks?
No, index I will trade. Index I will trade with the option. So I will say I will buy a 10,700 put.
Okay, you're buying a 10,700
Yeah,
put.
so I would say that when we go to 10,400, the put price will be around 300. So I will say 280 to 300 is the 10,700 put target. So participate there. And just in case we break out, you also have a stop loss there at 69.80. So if you lose half the premium, then your 70 points is okay for Nifty, because you can't get a lower stop loss than that.
Do you hedge that because it's at the money option?
No, you would say that you'll just buy it and keep a 70 rupee stop loss.
Okay.
69.80 is my stop loss level. So if it hits that, then you are out. You lose half the premium, you're out. But I still believe that one test at 10,400, this particular series is pending.
Okay, so that's the Nifty trade. What about specific stocks, Sarvendra?
I would take trading bets mixed, so I will take one buy and 2 sells. So the solitary buy today is on Bajaj Auto, where we feel that the last 15 days of range has been broken on the upside. Decent numbers also got reported today. So the momentum is built in here. I would say that 29.50 is the target going forward, say 3-4 sessions, and keeping a stop loss at 2849 is what I would recommend. Spot levels on Bajaj Auto to take a buy there. And I have 2 sells. One is, and the sells are all stuff that is now closed on a monthly negative after a fairly overbought reading. So first one is Ashok Leyland, where we believe that the stock earlier also had negative divergences, all negative divergence build-ups over the last couple of weeks. Now confirmed with a good monthly reversal bar on Ashok Leyland. So my sense is that this could have eventually lead to larger weakness, but right now we'll stick to the 200 long term, getting retested at 135. So a target at 135, stop loss at 158.70 again spot levels. And again, the last one is Bata, where I feel that overall there could be a distribution pattern, slightly medium term taking in place. And again, the stock could probably head lower, but I would say then again, a long-term retest of the long-term averages. 720 is the target for Bata going down. 788.10 is where I will keep a stop loss. On stocks, I think an early closing of stop loss will do. On the index, you already have a put, so no problem.
The bearish Sarvendra Srivastava. That's okay. Cool. Let's get in our fundamental guest on board. Teena Virmani, Vice President for PCG Research at Kotak Securities, joins us in the studio, has been very patient with us today. Teena, thanks so much for taking the time out and joining us. What are you guys telling your clients to do? Are you advising people to put in fresh money to work right now, or are you telling them to wait on the sidelines and wait for some correction and sit on some gunpowder?
See, our view on the market is to have a bottom-up approach and to be selective on stocks where you are seeing a good amount of earnings recovery, and to focus on the companies where they are going to benefit from increased consumption or rural revival or government spending. So these are the segments where we are actually recommending the clients to keep accumulating and keep adding despite maybe the correction in the stock prices of late in past couple of months. So that strategy is what we are recommending for clients for the medium to longer term, because we believe that now in the markets the volatility and the macro challenges are going to remain. We have higher crude prices, we have the concerns on fiscal deficit and concerns on CAD moving up, rupee depreciation, and even on the interest rates also, because now the cut in the interest rates, the rate cuts are already over. What we have to now focus on is how the interest rates are going to be going forward. So these challenges are going to remain, and given the fact that we have this election heavy year in this calendar year itself, so volatility is going to be there. So one should actually use this volatility to add these quality stocks and which are expecting the good earnings revival. So there, that is what is our approach for the investors.
You mentioned few sectors where earnings recovery can be seen in the fourth quarter. Any specific stocks that where correction has happened? Because we've seen the broader markets correcting a lot. Any specific stocks that you guys have been recommending?
So in the case of earnings recovery, we are expecting a healthy recovery in case of the construction sector, and we are expecting the recovery to start coming in for the cement sector also, mainly led by incremental volumes from various players. We also expect a decent amount of growth in the building material sector. Though we had to cut down on our estimates for growth because of pricing pressures which most of the companies had to face, and still the impact of GST implementation and e-way bill implementation is still not reflected on those companies. So that's the reason we had to cut down on our estimates a little bit for building material. But we do believe that with improvement in your GST compliance, these sectors should start doing well from second half of this financial year.
Interesting. Let's talk about a couple of spaces which are in news. The construction space. Now, what's the thought here? I mean, do you guys like anything specific? And if you don't have a company recommendation, I'll ask you about one company which is hot in news right now, Dilip Buildcon.
So Dilip Bilcon is our topic in the construction sector, and we do have a buy rating on Dilip Bilcon. There have been certain rumors which were floating in the market, which the company has also addressed regarding their auditor resignation and certain concerns as far as the balance sheet numbers are concerned. But when you prima facie look at the balance sheet, the construction sector itself is a working capital intensive sector.
True.
So you can't expect a construction company to have a negative working capital cycle. There are bound to be higher receivables, there are bound to be higher inventory. But then as and when the payments are released, the receivables come down. And when you
Correct me if I'm wrong, I'm sorry to interrupt you. I think we had a conversation a long time back with the management and they said they outsource a lot of their work.
No, Dilip Bilcon does not do outsourcing or subcontracting. They don't do subcontracting, and that's the reason they have higher margins as compared to the other players.
So everything is in-house?
Is in-house.
Okay, my bad then. Have you had a word with the management? Did they come out and clarify? Because obviously they've told the media channels that there's nothing of that sort. Auditors are not resigning. We've got the earnings also. But as a house, because you have your top call in the construction space is Dilip Bilcon, did you have a word with the management?
Yeah, we had, and I don't see the concerns which had been floating in the market from past 1 or 2 days. They do have too much of a weightage. One was also regarding the intangible assets and all, but I mean when anybody is punching the numbers of any construction company, any analyst or any fund manager would know that toll projects have to be classified as intangible asset. So I don't know why such kind of queries were being raised, but any which ways, I mean as far as execution is concerned, we believe that there should be a very healthy execution going forward for the company, and margins should also be maintained at similar level. So we maintain our buy call on Dilip Bilcon.
Okay. What's your view on cement, and are you choosing to go with the larger names or are you looking at some of the mid-sized names? Because a clutch of these mid-sized cement companies have come off. I mean, we had Orient yesterday on air talking about this deal reversal which has helped them, but by and large that stock has come off. The JK Lakshmis, JK Cements of the world haven't really done well. Sanghi has been beaten down black and blue. Not that ACC Ambuja are any different. What is it that you prefer in cement and why?
In cement, currently we do have a bias for the larger companies, and reason being, at least they would be able to command a significant volume share once demand starts recovering. And this being an election year, and the issues which were there till last year regarding demonetization or a GST and slowdown in the housing segment or a rural, slower than expected rural recovery, they are getting a little bit addressed. So volume gains are going to be witnessed for the cement companies, and we like Ultratech because firstly because of the huge volume gains that we are expecting for the company. One from the JP Associates integration, where company has already achieved drastic improvement in the capacity utilization, and we would also have the integration of Century assets once the deal gets approved after 2-3 quarters. So as far as costs are concerned, costs are likely to remain high for the cement sector. We do not expect the cost to come down. So those who are the leaders in the market, they should be able to command a premium as and when the price hikes happen as compared to the smaller players.
What's the view on the stock? If
we have a buy rating.
You have a buy rating now if they get to acquire Binani Cement's plant?
If they get to acquire Binani Cement plant, there would be some increase in the borrowings of the company, but when you look on a longer term basis, they would get access to the markets where Binani is currently present. They would get access to the limestone reserves, which is actually a key thing for the cement companies these days. So we would view it positively, but we will have to see at what valuations and what is the final price that the company is going to pay to Binani, okay, if at all it happens.
Okay, so my last question to you, and that's on what is arguably a very wide basket, which is home improvement. Right? There are tile companies, there are, I mean, companies like Astral, if I can use that term, get somewhere in that home improvement, home building space, a clutch of other names. What do you like the most and why?
So in the tile space,
you're constructive on the space by and large.
Yes, we are constructive on the space, but we do believe that next 2 quarters are going to be challenging. And as far as the implementation of e-way bill was concerned, after April, and now from the June month, we should start seeing volume improvement for these companies. But then if that doesn't happen, it's going to be a challenge for the entire sector itself. But we are maintaining our view that after 1 or 2 quarters, the volumes will start showing an improvement. So it will be a volume-led recovery, but not a pricing-led recovery. So we are positive on Kajaria Ceramics, we are positive on Century Plyboards, and on an overall basis, we are positive on Shankara Building Products also.
Because a lot of these stocks were going up after there was so much of emphasis on housing for all by 2022. Right. But majority of the stocks have actually come off the highs.
Right.
So which is that top pick in this space that you would recommend investors to look at now, considering the correction has happened?
So all these three, which one? The Kajaria Ceramics, Century Plyboard, and even Shankara Building Products.
Okay, Teena, we'll leave it at that. Many thanks for joining in today and giving us your perspective, and thanks for your ideas as well and your time. I could have well added thanks for being patient with us as well today, but it's just been so much that's happened. Nevertheless, let's talk about some specific names. Manav, I don't know if we asked you about Bajaj Auto or no, but since you track the auto names so closely, this 5.5% uptick in Bajaj Auto, is there room for someone to initiate some fresh trades here?
Yes, absolutely. If you look at the weekly chart perspective, the stock, after a series of decline from the highs of 3,400, is kind of forming a double bottom pattern, and these lows also coincides with some important weekly lows that was occurred in the past. So this is a very important support confluence and definitely provides a very high risk reward ratio. I sense this stock should not be traded for a very short term momentum play, but eventually this has a potential to test the levels of 3,100 or even higher. So the support of 2850 can be considered on the immediate basis, and a trail or a positional stop loss of 2820 on the lower side, and one can definitely take a ride for at least couple of months into this stock.
Okay, Bajaj Auto is also a buy call from Sarvendra side. Just want to mark few stocks. If you could just pull up Blue Dart, that's gone up almost 5% in today's trading session. Merck is doing well. That's up about 11%, as of now. And Tata Motors DVR, that's gone up 3 to 3.5%, I guess, as we speak, at 175. Sarvendra, any of these stocks on the charts where fresh trade can be taken?
I think I'll out of these three names, I think I'll go with the Tata Motors. I think clearly with the MSCI rebalancing and everything now getting over, the stock is now refusing to go below 285, 286, and I'm not looking at the DVR price. I'm looking at the stock.
Okay.
And I would say that from a trading angle, with these kind of oversold readings, very difficult for it to go much lower. And we have to also keep in mind the fact that right from 2012 onwards, 260, 270 has been the maximum panic that this stock has, and those prices have arrested the fall. So it's been 5-6 years, not gone much below 270, and all major volumes have happened around 270, 275. So I would say that what are you looking at? You're looking at a 15-point downside possible. Even a positional trade with a closing basis 15-point stop loss, you could look for a pullback target all the way till 330, 340 now. So I would say that positional basis also it looks good. And from a trading angle, you can look at a stop below 285, 284. Let's keep it at below 284 and look for a target of around 300.
Stay on. So much more to talk about. Gentlemen, both of you, stay on. Lots more to chat about. We'll take a very quick break on that note. Come back from the break and tell you what dealing rooms are recommending in the session today, give you some closing strategies, and maybe make you hear some more market voices.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back to Countdown right here on Bloomberg Quint. The markets, the Nifty Bank is the principal culprit. Aside of that, it's okay. Maruti Suzuki certainly made a strong roaring comeback, 3.5% higher. But I tell you what, what's broken the stranglehold of the auto names in the top 4 gainers list is Bharti Airtel. Put up the intraday of Bharti Airtel for the benefit of our viewers. And that stock is now trading at the highest point of the day. So good going really for Bharti Airtel. A lot of chatter about Bata on our social media platform. Actually, Sarvendra, you gave a call on Bata, did you?
Yeah. Yes,
okay,
yes.
You've given a call on Bata.
Yeah.
So maybe let me ask Manav about Bata. People have already heard what Sarvendra's thought is on Bata. Manav, any thoughts on Bata individually?
See, at these levels, the stock has an important support close to the levels of 740, and most importantly, if you're looking at its trend, the stock is still in its trend is still intact, and I sense as long as 740 levels are held on the lower side, which also coincides with its recent lows and its important long-term averages, I think we could see a bounce back again to the levels on the immediate basis. So this would be a very short-term call. Yes, I do agree. The trend on a high time frame is little bit. You can expect some range-bound volatility, but I would definitely look to buy this stock around the levels of 740, 745.
Okay, that's the view on Bata. Sarvendra, you suggested to buy the 10,700 put. One of our viewers is asking you if they can look to buy 10,300 put or not.
I think that would be very deep out of the money. That would be very, very out of the money. And suppose if you are saying that initially we are looking at a target of 10,400, that strike will not even get into the money. So the only thing is that you would just make that trading gain. And if time passes and it takes 10 days, then you end up making no money at all there. So I would say that it's better to take a 40-50 point risk or 50-60 point kind of a hit on the at the money option and try and trade, because then you get the maximum juice. And when you are in the money, then actually you can actually hold also. You never know. Tomorrow you get down 150 points, then the put value shoots up at the money. And then you can just hold on and then roll down to a lower strike with more quantity. I would say an aggressive strategy is always like that. If you buy at the money and then you double your capital, then you can buy lower and you can increase their quantity. If 10,400 breaks, actually you should increase the quantity. And you should roll down and go into a lower strike and buy more quantity and get maximum bang for the buck. So that's an aggressive option strategy, not recommended for everyone. But the guys who understand it in a trend, when you double down on the downside, you make the most money. So I would say avoid 10,300. Max you want to go down, go to 10,400. Sorry, 10,600, not below that.
Interesting. Some queries and some moves in the oil marketing companies, if I'm not wrong. If we can pull them up, BP, HP, IOC. All three should come up. At least HP and BP should come up on your screen the intraday. And they are doing reasonably well in today's session. 1.5% apiece are actually 1.5% for BPCL, HPCL marginally in the green. So no, my eyes were playing tricks with me. Not really big bang moves, but some moves nevertheless onto those. Stocks at 52-week highs include, Navneet has already spoken about Merck, Torrent Pharma, First Source, and KPIT Tech. Some fabulous moves really into some of these. Manav, Chopra, you come in on First Source. You know, not too many mid-cap IT stocks currently are trading at highs, but this one is, and it's gained steadily from strength to strength. I think a five-year chart is also exemplary. When Sanjeev Goenka bought the company, I think it was at 12 rupees, from there to 75. But just the move in the last 6 odd months has been terrific.
Absolutely, you know, in fact, the stock has seen a very good series of rally, and most importantly, you know, as the stock made a new high even on the weekly perspective, it has been backed by very good volume. So even though the oscillators are in the buy mode in the overbought conditions, I still sense this momentum would continue. The best way to trade this stock is, you know, to maintain your weekly lows as your trail stop loss. So in this case, anyone who's holding a long positions should definitely continue holding so with a trail stop of 69, and eventually, you know, the kind of a momentum it is in, I sense that the stock could also see some more upside into it. On the immediate basis, 79 would be the short-term targets, and thereafter 83. You know, this stock also, after a good sideways consolidation of 3 years, has seen a good breakout. So you know, the overall trend has definitely established very well, and it is definitely a good buy on dips approach. Is one this is a stock where even on the short-term basis one can look to buy this.
Okay, buy on dips approach is what Manav is suggesting on First Force. Well, besides Bajaj Auto, even Maruti has done quite well today. It's trading with gains of over 3%, and I guess we've got some query also going on Maruti. Somebody wanted to know whether if there's any trade that can be taken. I think Chetan had written to us. Sarvendra, any trade that you would advise on Maruti, considering it's up 3% in trade?
I would say that if it corrects, say 100-150 odd points, then probably the risk rewards would be better. Within a slightly medium to long term, I think there is definitely weakness here. You would for a buy side trade, you would want to wait 100-150 points, and even for a sell side trade, you will want it to pull back at least 100-150 points. Then you will want to sell, because right now it is bang in the middle of a risk reward range. So I would say that looking at the quality of the stock, and we also believe that there's something pending on the upside in Maruti, I would say that the moment it comes close to the longer term 200-day averages, around 150 odd point correction, then you have a good stop loss below 8450, and it comes back to around 8600, 8630. So you place a stop below 8450, and then you look for a target in the region of 9000, 9100. So that would be a good trade when it matures.
Well, let's ask the fundamental expert as well. What does he make of Maruti? Siddharth Sedani, Vice President for Equity Advisory at Anand, Rathi, joins us right now on the show. Siddharth, good having you. Thanks so much for joining in. What do you do with Maruti? I mean, as an investment, is it a better bet compared to some of the others?
Thank you, Neeraj, for having me on the show.
Pleasure.
Well, Maruti numbers were quite good, 26% on a YOY basis. Along with that, if you talk about the exports, which went up 48%. Maruti, definitely, it's a portfolio stock. It's a no-brainer. They have a product profile and the launches which is there in the pipeline for next 2 years. Of course, they have a lot of waiting in terms of their models. Even the smaller models has been really doing, has given a fabulous growth. So it's definitely a no-brainer, a portfolio stock. But what can we read further in the auto sales numbers? Is of course Ashok Leyland is one of the place where there is a strong growth on a YOY basis compared to the last month. Of course, last month was one of where we have seen a subdued kind of a performance, and Tata Motors also posted a good set of numbers. So I would still like to go with CVs more than any other stock, and Maruti, as your question and a particular precise answer, it's a no-brainer. It's a portfolio stock. It should be there.
Okay, that's the fundamental view coming in on Maruti, which has seen strong gains after it posted the highest ever monthly sales number for the month of May, remember. So good going for this one. Let's just address few stocks. Remember, broader markets have been weak since yesterday. So look at stocks like Kaplan Point. It's down almost 12.5%, and my producer also tells me it's been falling for the last 4 trading sessions. 1% beverages, Neeraj, now I think it's the 5th straight day of lower circuit. Now it's down nearly 10% after seeing some bit of respite in the opening trade. 1% is down 10%, and Markson's Pharma is down 8%. Quality is locked in lower circuit with cuts of about 10%. So from the broader markets, we're seeing sharper corrections coming in for a lot of these stocks. But Siddharth, I want to talk about V-Guard. If you track this one, the counter has been falling since yesterday, I think, post the numbers. If you did get a chance to look at the numbers, any thoughts on V-Guard?
Well, we don't cover V-Guard, so it would be really difficult to give a precise answer on V-Guard because we don't have a granular numbers of V-Guard.
Okay, no problem. But Sarvendra, very quickly on the charts, I think yesterday there was a fresh short build-up. Today also we are seeing fresh short build-up. Do you see further correction? Where is the support for this one coming at?
I will have to just get this stock out. I'm just trying to find it out.
The numbers weren't the best, right? The numbers were slightly patchy for this one. So it was down about 5. I think this week's chart for V-Guard will show you that the stock was down about 5% in trade yesterday as well, if I'm not wrong. And it's down another 5% in trade today. So this week's about 7%. The last 2 days is about 10%. I don't know if it's a trading play per se, but Sarvendra, do the charts suggest lower levels? And therefore, if somebody has it in the portfolio and is okay to get into that trading mentality as well, do you see lower levels here?
Yeah, absolutely. I think I see lower levels, and what has happened to mid caps, we've all been witness to what has happened since September onwards, the way individual stocks have sold, and this is from the outperforming category now. So if it's turned this time around, then in percentage terms, it has to go a long way and do much more corrections. Today is the first day on good. Last 2 days have been very good volumes, so that's a point to be noted, and these volumes are among the highest volumes in the last 12 months, these 2 days of volumes, back to back. Okay. And today we have broken the long-term 200-day averages, both simple and exponential. So that way, as the long-term trend is over. So anybody who was a long-term player, bought it, it's good time to book profits. If you're not able to regain 220, 230 going forward, the more time you spend below this, the more selling will emerge. So I would say that good time to book profits. Still, I think it's a better off stock and still not fallen the way others have. So my sense is that if it continues like this and stays below the long-term 200, then it is headed for at least 175, 180. So that would be at least, and then it can be slightly more, but I would say 175, 180 is the target in this breakdown.
Okay, that's the call coming in on V-Guard. Yes, but Neeraj, it's day 1 of the new series. I was just checking the list. I don't think there's any stock that can enter into the F&O band for Monday's trading session, but let's see. Stocks, I think, which were close to that were stocks like where open interest still appears to be pretty much on the higher side, are the likes of Raymond, Capital First, and your usual suspects. Diwan Housing, I remember for majority of the period in the May series was into the ban period.
Actually, pull up Diwan Housing today and let's see what's happened to the stock price. A lot of talk flying around. The stock, though, flattish in the session today. What's done well in the last few minutes of trade is Engineers India as well as Dr. Lal Path Labs. Both of the stocks have moved up, and Engineers India in particular, from the levels that it was at, a bit of a sharp pullback there. Similarly for Dr. Lal Path Labs as well. Siddharth, what is it that you would be recommending? I mean, right now, if some of your clients are calling and asking about what stocks are there in which people can put money to work from a long term, from a 2-year, say 2-year, 3-year perspective, what is it that you would be advising them?
Well, Neeraj, mid-cap is really getting battered, but there are good companies which is available at a lower levels where buy on dips strategy can be adopted for those companies. And what we are recommending at the current juncture is companies like which are catering to auto sector, which are an auto ancillary pay, companies like Sundaram Fasteners. We have a target of 760 with a 1-year horizon. Now it's the largest player and exporter in high tensile fasteners, catering to most of the segments like two-wheelers, three-wheelers, commercial vehicles, tractors. So it is catering to all the segments in the auto sector. So it's completely a wide range of products. Of course, the company is planning to get into the further product mix and improve the product mix going forward. Company has done a 200 to 300 crore capex in FY18, plans to have a 350 crore capex. What quality brings in is return on equity, because a value investor would always look into some of the financial parameters like return on equity. This company has a 25% return on equity. So Sundaram Fastener as an auto ancillary play, strong management, as we know, it's a good parentage. Along with that, what we believe is auto play is really doing good. Looking at the auto sales numbers today, of course, there is a lot of traction which is seen most of the segments, if we talk about passenger vehicle or commercial vehicle for that matter. So of course, Sundaram Fastener in the auto ancillary play with a target of 760 1-year time horizon, one should definitely buy this, and buy on dip strategy should be adopted.
By the way, just a small global update as well. Spain's leader Rajoy has been ousted in a no confidence vote, with the Socialist Party gaining power. The European indices, all three of them, at least the three that we monitor, FTSE, CAC, DAX, all of them are up in the session today. The Stock 600 too is up about 1%. So by and large, the screen is green in the rest of the world. It's unfortunately quite the opposite for our markets, but the European markets seem to be okay. Can you get the Dow futures as well and just try and see what's happening there before we move on to what dealing rooms are recommending in the session today? Marginally higher, so we may be off today, but the world markets don't seem to be unhappy a place. Maybe, just maybe, a small surprise there. Let's wait and watch. For now, it seems okay. Last 14 minutes of trade left. While we can't get information on the index, nobody can, but what we can do is call up dealing rooms and try and get information about what specific stocks are the talk of town. Yatin Mota is joining in with his channel checks on our segment Dealers Say. Yatin, good afternoon. What are you learning?
Neeraj, PSU banks, all of them, of course, are under pressure, but dealers do indicate there is some positive news flow expected over the weekend and next week. They're talking about some announcements with respect to PSU banks from the government end. PNB, Bank of India, Bank of Baroda, all of these, SBI, all of these stocks are on the dealing room radar. They are selectively buying, PSU banks at this point in time currently. Also, watch out for SRF. The stock is down 4%, but dealers do indicate that, BTST is something that dealers should look at as far as SRF is concerned on the chemical side. And finally, we have Diwan Housing. That is one stock wherein dealers are, initiating some short positions on the basis of F&O trend. So this is one stock on the dealers' radar as well.
Thanks, Yatin, for bringing in all those details. Well, at least some support is coming in from the heavyweight Reliance Industries today. I think that's sitting with some amount of gains. Reliance was up in yesterday's trade as well, or about 0.5%. And today it's, however, off the day's high, but still giving some support to the market. Manav, on the charts, is there any trade on Reliance Industries that one can look at?
See, Reliance is having an important support levels close to the 910, 915. So, it has been consolidating near these levels since last couple of trading session, and the price band has been enveloped between the 100 and 200 EMS, and a breakout today. And if the stock closes above 925, I think this stock could see some sort of an outperformance going forward. On the immediate basis, the upside target for Reliance will be at 945, and someone who wants to initiate a fresh longs can do that with a stop of 918.
Okay, Bajaj Auto, Maruti Suzuki, Bharti Airtel, Hero MotoCorp, a clutch of those names are the ones which are leading the index higher. Eicher Motors is down. We haven't discussed Eicher at all. Siddharth, a small miss at that. The stock is down about 2.5–3 odd%. What's your view on Eicher Motors?
Yes, in today's market condition and this kind of a volatile conditions, of course, a small miss will give a deep cut, and that's what we have seen in the results season also, and that's what follows in the sales numbers even. But I still believe that commercial vehicle will do good for this company going forward. In terms of RE is concerned, I think it's very difficult to break the market share of Royal Enfield for Eicher Motors. Although bigger players like Bajaj Auto is definitely trying, they are trying to eat up the pie of those markets. But I think it's very difficult. I think Eicher Motors will be back to business very soon with some value-added products going forward. Although we have no recommendations on Eicher Motors, but still I would suggest if somebody is holding the stock and thinking of offloading it, well, it's a quality play, can bounce back and revive very soon.
Okay, it's 3:20, that time of the show when we get you some closing strategies from our technical experts going. Manav, any BTST or STBT that you would recommend for Monday's session?
See, at the current levels, KPIT looks very well placed. This will be one of our BTST candidates, and most importantly, the breakout that has taken place today has been accompanied by very good volumes, and the momentum indicators are still in the buy mode. So I recommend a buy into this with a stop of 281 for an upside target of 296.
Okay, that's a buy on KPIT Tech, a counter which has been quite strong actually in the last few sessions. Sarvendra, what about you?
I will be picking up from the basket which is going down, so around 1,400-1,500 stocks going down to around 400, 430 on the upside. So I'll pick from the sell side basket given STBT. I think what looks weak to me is Berger Paints. These are spot levels. My sense is that the stock probably in the next session should be somewhere around 282. 280, 282 will be the target on the downside for Berger Paints. So a sell on Berger Paints with a stop loss kept at 293.10 for a target of around 282.
Interesting. We haven't discussed these insurance companies for a while. Just want to bring them up. HDFC Standard Life or ICICI Pru, or for that matter SBI Life, lying low the last couple of weeks or 3 weeks at least. Don't come up into any kind of conversation at all. Otherwise, it's a fairly hot sector, to be honest. ICICI Pru too, despite those good numbers and stock going up all the way to 430, 445, has come off as well. So insurance certainly not the hottest sector currently. Siddharth, Sedani, what's the insurance buy at Anand, Rathi? I mean, do you guys have coverage here? And if so, what stock are you recommending?
Well, we don't have a coverage on any of the insurance plays. But looking on the prima facie, looking at all these companies, I think HDFC Lives, ICICI Pru, these all companies has been really doing good. Numbers are good. But on a complete yardstick, on an entire sector wise, if I talk about, this sector is still expensive. Although people are buying, people are getting gung-ho about this sector only because of a reason, the kind of penetration level we still have. And if you compare the valuation with US or other developed markets, the valuations are pretty expensive, but only on the back of the penetration level which India has an under-penetrated insurance space. I think people are gung-ho about it. Yes, it looks quite interesting with a long-term perspective, but I think if somebody is planning to buy these companies for 12 to 18 months, I think they are missing the actual target. They should be with a 3 to 5 year perspective, then only they would achieve their goals.
Okay, pull up Steel Authority, that sale. Remember the numbers had come out yesterday. They posted a profit figure versus the loss which was seen in the corresponding quarter. 18 was the profit versus the loss in the same period last year. In fact, the losses for narrowed. Siddharth, do you guys track Steel Authority? If yes, do you think the numbers were already priced in, because we were seeing some bit of outperformance from stocks like Steel Authority and JSPL?
Well, Steel Authority numbers didn't excite much. In fact, the other numbers like JSW Steel and Tata Steel numbers were far better. We believe that steel space has long further legs to move ahead. Looking at all-time high in terms of realizations, looking at the other spaces globally which has been really doing good, has been really encouraging in terms of steel space performing well in 2018, although with a caveat that global coal prices are up by 15%. which may impact their raw materials here, because some of the players in the steel space are still importers of coal. So there they may see some kind of hiccups in terms of raw material cost is concerned, but overall steel space looks quite interesting, but not necessarily SAIL. Of course, the other players like JSW, Tata Steel are better placed rather than SAIL. In the entire space, we don't have a particular recommendation.
Okay. And our stock which has just zoomed in the last few minutes of trade is Engineers India. Pull up that stock for you. It's gained from the levels that it was trading at. It's gained about 4 or 5%, but essentially up about 2.5%. However, a move nevertheless of up after I think 3 consecutive days of a fall. Sarvendra, Srivastava, can I request you to have a look at this stock and tell us what do you think of the charts?
No, absolutely. I think the stock has done the bare minimum corrections that we are looking at start of the year. So from 200 down to 130 odd. I would say that this is a stock that we've always liked, and we like the amount of correction that's already come in. So saying that another 10-20 points is possible, but I'm saying that there's a good case in point for a medium-term risk reward which is turning positive.
Okay.
And if not more, at least I would trade for a target of around 155, 160. As long as lows, we hold the lows that we printed today, and that low on the cash is 126.80. These are the highest volumes in the last 7 months, or single day highest volume on engineers in the last 7 months. And probably 6 more minutes to go, so probably it can be 9 to 12 months as well. So definitely something happening here. The volumes tell you that. So it's a good trade right now, not far away from the low. 127, 126 was the low, 132, 133 is the price. I can still believe that 155, 160 is doable here.
By the way, that's the Bloomberg chart, and that white line that my producer is trying to show is the volume today, and the blue line below it is the 20-day average volume. So the volumes that Sarvendra is talking about, of course, he's got more data about it being a 6-month, 7-month high, but on a 20-day average basis as well, the white line shows you just how high the volumes are compared to the 20-day average. So that's the point about Engineers India in the session today. What else, Amit?
Well, Neeraj, IndusInd Bank, yesterday's outperformer, when it gained 3.5%, is at day's low right now. IndusInd Bank has seen cuts of 2%, 19.13 is the price where it's trading. Manav, if somebody was carrying the longs from yesterday on IndusInd Bank, what should they do now?
See, the stock has important support at 1880 on the lower side, and which also coincides with its important short-term averages and with important filters. So as long as 1880 is held, I think the overall trend for the stock will remain bullish, and most importantly, the trend is still intact. So I recommend that one should continue to hold long positions unless key support levels are breached, and then we conclude that if there is a short-term reversal. Till then, I think the stock will continue to outperform.
Okay, so you can look to hold on to the long position. 1880, if I heard it correctly, Manav mentioning that's the support on IndusInd Bank. Just pull up JSW Energy. I think that's corrected quite sharply, and that too is at day's low. JSW Energy is sitting with cuts of almost 8% in trade. And one stock which has been doing well from the futures and options market is Cholamandalam Investment and Finance Company. That's up nearly 4% in trade, almost at day's high level. We'll get a view on this, but as of now, let's head across to Neeraj to find out how exactly today's closing and weekly closing too is panning out. Neeraj, after yesterday's stellar run-up on back of short covering, which was majorly led by the private banking space, we're seeing some cool off today.
And again, led by banks, Navneet. So down about 1%, the Nifty Bank, and principal culprit for what's happened to the Sensex and the Nifty. I think we're closing the lowest point in the last few hours, maybe the lowest point of the day as well, but not a good sign today. But it's okay. First day of the new series, the volumes, though I must say the volumes were a lot higher than what you normally see, but not on volumes that we saw in trade yesterday for sure. The mid caps and the small caps, they continue with the pain there. The broader end of the spectrum is slowly getting chipped off, and stocks are very, very close to the 6-month, 9-month, 12-month lows across the spectrum, and that's actually not a good sign. A lot of mid cap and small cap, and a lot of retail money is in those stocks, and those stocks are slowly getting chipped off. But maybe they are appearing value zone. Let's wait and watch. Well, let me talk about the large caps. Now we will bring you up to speed with what happened at the broader end of the spectrum. Bajaj Auto up about 5%. That's the principal gainer. And then look at the other auto stocks. So Maruti, Tata Motors, DVR, Hero MotoCorp, Tamo itself about 1.5% higher. So going well. ICICI Bank, the stock in news today. up about 1%. What's not done well today, aside of course, ONGC, Tata Steel, M&M, HUL, are banks. So look at IndusInd Bank, 1.5% down. Kotak Bank 1.5% down, HDFC Bank 1.5% down, Yes Bank about 1% down, and HDFC would be somewhere in this list as well. So it's not turned out to be a really, actually HDFC is marginally flat, but banks by and large have looked slightly wobbly, and that's the reason why we have the index doing what it is doing. But the broader markets are different kettle of fish. Navneet, a lot of pain, especially at the small cap end of the market.
That's right, Neeraj. In fact, yesterday too, when the frontline indices were up, we did highlight for you that the broader markets have been under pressure. Today also, as Neeraj highlighted, 1.5% cut. But let me still start off with the gainers first. Merck was quite active in today's trading session. Merck finally closing the day with gains of 9%. And you also had Piramal Enterprises, which surged, I guess, in the second half of the session. No major gains, but still closing around the day's high mark is not bad, 2.5%. Godrej Consumer, a lot of technical analysts have been giving a call on this one. That was up nearly 2% in trade. And Cholamandalam Investment and Finance, once again an F&O counter, saw gains of 3.5%, closing the day at day's high. Blue Dart was the other one where some sort of buying was witnessed in the second half of the session, and that's closing with gains of around 5%. On the losing side, well, I've got a lot of stocks, but I've just picked a few. Atlanta, remember yesterday it was down 20%, locked in lower circuit because of the news of auditors resigning. Today also it closed the day at day's low, but it didn't. We didn't see that lower circuit coming about. Quality was the other one where sharper cuts were seen in the second half. That was locked in lower circuit with cuts of 10%. Kaplan Point, which has been falling in the last 4 sessions, saw sharper cuts in fact in today's trade, closing with cuts of 12 points. Marksans Pharma saw selling coming about in today's trading session, so that too was under pressure. And Reliance Communication, which was going up in the last 3 to 4 sessions, on day 1 of this new series saw cuts of over 10%, and V-Guard has been reacting negatively to its numbers in the last 2 sessions. And finally, Steel Authority, which came out with the earnings yesterday, failed to excite the market today, and that too is closing around the day's low mark and saw cuts of nearly between 5.5% to 6%.
Well, so that's the picture at close for the day, and then we'll get in the weekly picture as well. But for the day, we're closing at the lowest point of the day for a clutch of indices, and that's never a good sign. Right out there at the lowest point of the day for the Nifty and the Sensex, and that's never a good sign. The Nifty Bank too down about 1%. The volumes, okay, the market breadth firmly in favor of the declines in the session today. So it's not turned out to be a great day. Look at that. The declines are 1200 versus 300 advances. It's been a very unhappy day for the market breadth, to be honest. But the turnover, Navneet, I'm interested in seeing what the turnover is looking like. First day of the series.
It's slightly on the higher side. Usually we see a turnover of 3.5 to 4 lakh crore on day 1. So I'd call it, this is very close to the average turnover you see on a daily basis.
Yeah, let's pull up the weekly performances as well and should throw up some interesting trends as to what's happened in the week. Okay. This is for the mid-cap index. And is this for the week? Yes, it is for the week. Well, no noticeable names there.
Dilip Bilcon, that's the highlight of the week, Neeraj.
Down about 17%. Yeah, yes. Well, you're right. So that one. Wakrangi is on an upper circuit today, by the way.
Whoa.
But yeah, it's lost about 14% nevertheless. But yeah, it's on an upper circuit today. V-Guard, I think we're just talking about
earnings.
It. Yeah, and surprisingly, Coromandel International is up about 8%. Surreptitiously has made its way back after getting hammered about 2 or 3 weeks ago post its numbers.
You know, we didn't take any view on this one, but Torrent Power and both Torrent Pharma have been quite active in the last 2 sessions. So for the week also, they've been doing pretty well. And Godrej Group companies, Industries and Consumer have been pretty strong in a weak market.
Yeah, well, maybe we'll talk about them as well with our experts. But yeah, this is more or less the picture at close. Let me try and correct that. Talk about, by the way, SpiceJet is up about 8%, which is actually not a bad sign. But let's try and correct that. Talk about some of those names. Manav Chopra, Torrent Group, Torrent Pharma, Torrent Power. What have you made of the charts this week?
See, the most importantly, this stock after a good series of consolidation has seen a very sharp breakout, and the volumes are definitely looking very attractive, and a weekly close above its key support, key important resistance level definitely indicates we could see some more upside into it. The support for Torrent Pharma on the lower side will be close to the levels of 1400, and one should definitely look to buy this on lower levels. In case if we see this stock breach 1450 on the upside, I think the next window would be open and we could see another room up for another 10-15%. So this stock is definitely very well placed, and the other stock is Torrent Power. We've already seen 7 to 8 sessions of consecutive rally into this. Definitely, though, looking at the current formation, I sense that one should look to buy this on dips. 260 and 255 are the important support clusters, so one should wait for this stock to cool off, and once if we get this on the important retracement level, definitely look to enter. And on the upside, the stock has a potential to retest its previous all-time highs of 300, so this has to be viewed for more of a medium-term play.
Okay, that's the view coming in. The technical view on the Torrent Group companies, Torrent Power and Torrent Pharma. Before closing, Sarvendra, I was highlighting Cholamandalam Investment. How is that one looking on the charts? Because that went up in the second half of the session.
I think within this financial space, I think a small little correction on this one seems to get over, reacting from its medium-term averages. So as long as now we stay above 1500, there is a case in point where the stock could pull back towards 1650, 1660. But beyond that, I think I would not take a call. More or less, I think this should and will remain a pullback. So 1650 is max on the pullback, what I will look as a target.
Okay. Sarvendra, Manav, Chopra, gentlemen, many thanks for joining in today and giving us your thoughts. Really, really appreciate your time. Do we still have Siddharth, Sedani? Okay, we should take in a final thought from Siddharth, Sedani as well. Siddharth, as we speak, Hero MotoCorp numbers are out, and the estimates were 6.75 lakh units. They've come in at 7.06 lakh. But for iShares, I don't think any of or maybe Escorts to an extent which was in line. Almost every other auto company has actually done much better on the auto sales than expectations, isn't it?
Yes, of course, and the kind of numbers Hero has posted, that is stellar set of numbers, and it was much anticipated, because if you look at the rural sales numbers, I think there they would be catching up the traction, and that will be the only space where they will be catching the traction going forward. Of course, the kind of thrust which government has in the rural revival before the elections, of course, especially, and the kind of spends they have done on the infra side in the rural economy, I think rural cycle will definitely revive, which will benefit Hero Moto in coming quarters too.
That's been the overarching theme, I guess, the recovery in the rural market, on back of which the bet has been on the consumption space. Siddharth, we leave it at that note. Appreciate you joining us today. Have a good weekend. Well, with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj and my side. Don't go anywhere. Coming up next, where we wrap the day's trading session for you on Bloomberg Quint's Market Wrap. Stay tuned for it.